Good afternoon, everybody. Today I'm chatting with Buster Hunsaker from Giant Mining Corp. In this interview, we get into the company's recent drill hole, which, let me look this up here, 1.35% over 66.4 meters. Now, if you're like me and you believe that a big copper bull market is upon us, and you're looking for assets that have been somewhat drilled out, most of the exploration work has been done, and you're saying, okay, how do I create a watch list and a portfolio of names that I find interesting for this exact scenario where we're going to start to see names pour into those juniors? Well, I think that this is a company that at the very least you ought to do some homework on. So everybody, in this interview, we are going to get into the recent drill holes, where the company's project is, which we've had Buster on before, but we're going to revisit that. And we're going to talk about what we can expect as investors should we be following the company and choose to invest. All right, everybody, enjoy the interview. Buster, thanks for joining us today.
Steve, we're excited to tell you about this holes.
Well, I'm excited to get into that too, but first I got to ask you about what's going on in the copper world. The last time we spoke, Robert Friedland was one of the very few names that was actually going out there talking about the copper deficit. And just last week, we now got BHP hopping in on this party. So then they're saying that AI could trigger a huge spike in copper demand that could result in a crisis if we don't do something by 2050. In your view, why aren't we seeing this reflected in the prices of copper just yet?
I still think the market doesn't really accept this copper shortfall. And I just saw an article on one of the journals, mining.com, I think, where Rio Tinto was saying all this M&A is great, all these acquisitions are great, but we're still not having the identification of new resources coming out. And I think that I just think people don't really believe it yet. We hear it for so long on resources, and then until it pokes us in the eye, and I think until that comes along, you'll see all of these things, all these brownfields programs will just plod along until you see that recognized, and then they'll explode. And which something like a Majuba then really will go bonkers, because those are the things that are really going to add to the future. And I think the people just don't really believe it yet, which is believable. I don't blame them.
So Buster, we were talking pre-interview, and I brought up the thesis of the guys I know who have made big money in junior mining. And what I love about it is when you talk to people who have done this a few times, they make it sound so simple, right? If you want to make money in junior mining, there's three things to think about. One, you got to get the macro right. Two, you got to get the asset right. And three, you got to get the timing right. Especially when we're talking about these juniors, because they're expensive to run. There's going to be dilution. If you don't catch the tailwinds and you don't have an asset that is going to perform with the tailwinds, you're going to get wiped out. So for our audience who's watching that, maybe they believe in the copper thesis, they've heard the Robert Friedland quotes, it got them excited. Now they're saying, okay, I got to find some copper juniors that I like. Let's just give them a quick high-level overview of Giant Mining, where you guys are, what you guys are building, and why this might be a copper junior they want to put on their watch list.
Well, I really like your three, because I think it does sound simple. Macro, you start to recognize the copper space. Where Majuba really comes in and where Giant really comes in is when you start talking about the asset, because it's an asset that's been built at a time beginning when the macro was a glimmer on the horizon. And part of having an asset, especially in the copper space, is copper projects are big. They are big and they take lots of baseline work. It'd be like building a skyscraper on the foundation of a 2,000 square foot house. It doesn't work. The foundations are deep and they're strong and they're broad. And that's what Giant has built with Majuba. We've not only, of course, we had the historic mining going back a century for the very high grade stuff, but the project has been built out on the size of the property in we're obviously in a we are in a very safe jurisdiction, being in Western Nevada, one of the greatest, or if not the greatest place in the world to work. But we've also, within that jurisdiction, built out our relationship with the regulators, with all of the permitting that goes on. We've been able to establish sound infrastructure into the project to get around on the project. So I think those are the things you want to look for in the junior, is that asset that really has, that's sustainable. It's like the story of the three little pigs. You want to build something that will sustain, will withstand the changes as that macro, and because face it, the macro environment's going to build up and down and up and down, and you want an asset that will survive that, which is what Majuba is.
So Majuba, it's a property in, is it northwestern Nevada? Is that right?
Majuba is in northwestern Nevada. We're on good existing infrastructure. It's a porphyry copper project. It's got primarily lots and lots of copper, but like all copper, like all port. Go ahead. Sorry, Steve.
I was going to say, but also there has been a lot of historic work and drilling done on it. Is that accurate?
Yeah. Majuba was discovered, went into production in the early 1900s, and they mined underground. They mined about 3 million pounds of copper, that's kind of the first step when you look at an asset, a copper asset, any kind of metal asset. Did it produce? And it did. It produced a lot of other metals with it, which is what you would expect in a copper setting over time. High grade metals, it produced high grade copper, which is what you would have had to produce in the day. Then, beginning in the 1940s and 50s, there was drilling started as the world went through this macro cycle we're again coming into, where it needed more copper. Holes were drilled and found lots of copper. They didn't meet the cut at the time, or there were places in the world you found the giants in the world. But that data was there available, so we had lots of drilling. We've got about over 80,000 feet, 25,000 meters of drilling now that we have, and we have about 20,000 meters of that still available. So we've been able to lever all of that historic data to come back around, take the knowledge that was learned in the last 50 years and say, look at this. Look at what we're seeing. Look at what we see on the surface, even at Majuba, that wasn't recognized before, and press on with that.
I also like that as a way of making money in junior mining. The idea that last cycle's low grade is this cycle's high grade. And let's talk about some of the recent drill results you guys put out. My understanding is you guys just put out an intercept of 1.35% copper over 66.4 meters. What can you tell us? Why is this a significant drill hole for advancing the project and the economics of the project?
Well, sometimes I forget to mention to people, because first of all, that 66 meters, you take that 66 meters, it starts at zero. If you had come out onto the project and you saw where we put the drill pad, you would see that when we cut out that drill pad, as we were cutting out that drill pad, you could look at the same stuff that runs down below. That's kind of, sometimes we overlook that at Majuba because we're so used to being on the surface. We talk about underground, but they started on the surface. So first of all, it started at the surface. That's significant. Second of all, within that zone, there was another 22 and a half, 22.6 meters that went 2.6% copper. And that was a continuous interval. It's spectacular looking core. And so then the third part of that would be that we did a very deep technical review when we started early in the spring here, going through this with world-renowned experts. One of the things that came out of it were breccias, a rock type at Majuba that we knew it was there. We knew when they mined it, but the significance of it, I don't think we had really dialed that in relative to the modern understanding of porphyries. And we sort of dialed that in. We were drilling this hole to expand known grade. We were looking for 1% rock. We got 1.5% rock. In fact, we got 2.5% rock. So we upped our grade, which is what we're after. But second of all, the geology became predictive for us. Something that we saw in the spring When we drilled this hole, we saw it. We've seen it in the second hole, which we'll have results from in a couple of weeks. But we saw this breccia, and that just really, when you're levering data, when you're looking to see new stuff, it doesn't get any better than that. It means you can expand it, you can follow it.
So does this mean that we could be seeing an expansion of the high grade copper that you guys have found? Like I know you don't have a crystal ball, and you
Yeah,
got to put the truth machine into the ground, but you're optimistic here that we got more high grade copper coming in.
yeah, yeah. Because when we modeled it, when we work off of this, we're working off of the model that we put together in late 2023. It was formed the basis for the NI 43101, which gave us our exploration target. In that, we modeled this mass of copper. Majuba stands up like this. It starts at the top of the mountain, and we're working on putting open pits in. And now what we're seeing, and within that big mass of copper, we start looking like is the high grade, because the grade varies even in a copper deposit. It's not continuous. So where that high grade, where we found that high grade, if we can look at the geology and say, we understand the controls of this. If we've got two high grade pods here, we can come back in with these, which is what our RC drilling that we talk about is doing, to come in and expand that high grade. Even a little bit of an expansion in the high grade means that the open pit then gets bigger, and all the other material that carries the high grade, there's lots more of that, but finding more high grade. So working these high grade pods and expanding them and understanding the controls. And that's what we expect to come out of this.
So do we have any sense of how big the deposit here could be? I know we previously talked about that, but like so far, like just to give our audience some sort of a sense of the visualization, how far apart are the current drill holes, and what kind of sense can we get of just the overall size of this, the
Well,
scale of it?
right now we're working on this on the 50 to 100 million ton target, and that that's really the vetted number that we use, because that's what we can see. We can put an open pit around it, given we continue to have drill holes. I mean, high grade drill holes like this, but just drill holes that continue to intersect copper within the broader model in the open pits. So 100 million tons would be the size potential for what this drilling does. What will change a little bit with the next round of drilling and recognition of these breccias is we have a whole nother area where these breccias have some historic drill holes through them and some historic sampling on the surface. And part of our program going forward here in the fall, following this drilling, is to sample these breccias on the surface, because it opens up a whole nother area that could be, it's something that we would have drilled deep holes on to look for the much bigger blue sky potential porphyry deposit, the billion-ton blue sky. But with this resource, this maiden resource we're working on, we think this other zone has the potential to be the same, which then means instead of 100 million, we're working at a 200 million ton target. But the immediate focus, I mean, let's face it, money is hard to come by. We want to focus on things that put rock in the box, that add value to the investor. And first and foremost, this 100 million tons is what adds value. That's what brings market cap. That's what will bring the price. That's what brings money for the people that will advance these. But so that's the focus. But we think we may have doubled the potential with these holes, with these results.
So, Buster, do we have any sense of how much more drilling is going to have to happen here in order to put out a maiden resource?
Yeah, we think the plan still is with these next 18 holes, 16 to 18 holes, RC holes. Those will be the two core holes. The core hole that's we're reporting on now, assay results on the second core hole as the sawing gets completed, and then the 18 holes. Those will all go back to the QP. The metallurgical work that we're doing will also go back to respect our consulting firm that's doing all of that work. and the Maiden resource. All of this is where we expect the Maiden resource to come from. We think this drilling program that we're on now, so 18 more holes, 16, 18 more holes is what we expect. So we're headed that direction right now with this program.
Okay, so you guys stated that you believe that there's an exposed copper oxide deposit on the surface, and then you got a sulfide system underneath. Does this present any kind of challenges when it comes to metallurgical work?
Well, I mean, I would love to say no, but you can't be talking it'd be disingenuous for a geologist to say no, we don't have any metallurgical problems. Of course, it raises metallurgical issues. The sulfides, we don't know enough about our sulfides because everything we have drilled is oxide. So what we and when we think of sulfides, one of the sulfides that you can recover in a heap leach is chalcocite. I mean, chalcocite is a secondary mineral. So when we talk when we talk oxide, I'm including the chalcocite within that. The metallurgical work we've done that we've done so far, and the discussions we've had say we know we're going to get around. We used 70% before. We actually are expecting you to get up into the 80% range, maybe 85% range on the overall metallurgy. So to think about it generally is easy. When I have to think about the details of it, we've got a bunch of test work that is planned. We've got lots of work from our out of our inventory of samples and specimens and pulps that will be assayed. So from that sense, it's not a slam dunk, but everything we've done says we've got this base and we're making it better. So we think it's going to be there. The metallurgist who's experienced with working on these kinds of processes sees no issues at all. It's one of the reasons we're drilling the RC drilling. One of our technical advisors specifically said, before you drill these holes, you have to make sure you're not wasting your time drilling an oxide deposit that won't leach. And our metallurgist said, yeah, we can make this work. This will work. This is what heap leaches are about. And we're in the heap leach capital of the world, even though it's gold in Nevada.
How common is an oxide system on top of a sulfide system?
It's the name of the game.
Okay.
It's what's made porphyries. It's where Majuba stands out because it's one of those things that when you go back to your question about the three features you look for an asset that looks like what the rest of the world has been mining for 100 years, and that's what you want to find one that nobody recognized before. So that's what started us at Majuba. It's like, look at all this oxide copper and what's underneath that. And the drilling that we did said, geez, it looks like all that sulfide's down there. And then the reason nobody recognized it before is because we had such a thick level of oxide on the top of it. And the geology was different. This breccia we're finally recognizing is coming in. The rock type was different. It took a ton of science to build out that asset. So really, the analogs I'm using right now are in my backyard, essentially in Arizona. I'm not going to Chile. I'm not going to Europe. The analogs that we're using are right in our backyard, and those pieces that we're using. I mean, the recent discoveries in Idaho were in those belts. We're not even looking at a new belt. We're just taking a gap, mines down here on the southern end, mines in the northern end, and now mines being found or deposits being found in between. That's where we are. So we have a lot of very common characteristics for porphyries.
Okay, well, Buster, I think you got a very interesting project here. And for people in our audience watching, going, okay, well, the stock, the valuation's really low, and a lot of the other copper juniors aren't moving. I think that this is the right place at the right time. If you've made it through this video and you're still watching, I think that you're in the right place. We're early, but you'd rather be early and be right than be late to the party, right? And these are the kind of assets that I think you ought to be watching if you believe in that copper thesis and you think that the world's going to need more copper. Safe jurisdictions, a great jurisdiction Nevada is. that have projects that can hit scale. So, Buster, thanks very much for hopping on here. I really appreciate your time, and I'd love to make it out to the property at some point so we can walk around, kick some rocks together, and show our audience what it looks like.
We would love to have you, Steve, because the scale and the rocks on the surface are just, they'll blow you away. We appreciate it. We appreciate you. We would love to have you out there.
Thanks, Buster.
All right. Thank you.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everybody.